Yo, everybody, back at it once again. Favorite entrepreneur, your boy official Tyree Samuels. And once again, what we're going to be going over is another opportunity that unfortunately we did not get a chance to take advantage of. But in order to see why we missed out and how we can possibly avoid it happening again, y'all go ahead and wait for the next clip. I'll see y'all soon. Peace. Yo, everybody, back at it once again. Favorite entrepreneur, your boy official Tyree Samuels. And what we're going to be talking about today is a little unfortunate. So I know you guys already saw the thumbnail leading up to, getting to this portion of the video. But before we go ahead and dive into that, right? What I want to be able to talk about is, if you like watching my videos, please go ahead and hit that subscribe button before we go any further, because that's how YouTube can see that you guys appreciate and you want me to keep dropping content. And then placed right below the subscribe button, you're going to see the like button. You're also going to see the thumbs up. I would appreciate if you can go ahead and tap onto those as well too. So we're going to be talking about, as you guys saw, we unfortunately missed out on 100+ pips on Eurnzd. Now we're going to talk about why I liked Eurnzd to begin with, and how is it that we missed out, and how can we possibly do something different to avoid missing out again in the future. So as you guys already know, the way that I like to be able to break things down, I like to be able to pull up, a different data feed so that we don't necessarily have to interrupt anything that we currently already have marked up. So what we gonna do is we're gonna go ahead and go over the setup as it would have looked at the time that I was looking at the opportunity. Excuse me. All right, cool beans. So at the time that I was actually looking at Eurnzd for a possible shorting opportunity, you guys should know, hopefully if you've been on this channel enough, you know my favorite time frame to be able to do an analysis. It's going to be the 1 hour. Okay. So from the 1 hour, I like to be able to initially gauge, okay, what's the overall direction, right? What is the trend? And am I going to be trading with the trend, or am I going to be trading against the trend? Obviously, if I'm trading against the trend, it would be a counter trend trade. Now, it doesn't mean that it's a bad trade to take. It just means I need to be aware, so that as far as my targets, where I'm entering, where I'm placing my stop loss, all these things are going to have to go into it from knowing the direction I'm looking to take the trade, right? So the first thing I want to be able to point out, which should be self-explanatory, right? This market has been dropping, right? This market has been increasingly getting lower. Each one of these highs has not come back to be violated, right? So since we're able to see that, I'm pretty confident that this is a downtrend, okay? I'm gonna just go ahead and throw that out there. Now, the next thing we want to be able to see is, if it is a downtrend, all right, this last impulsive move, where would this fall in line if we were to do a simple fib from the high to the low? Okay. And hopefully you guys know how to use the fib, because the fib is going to be your best friend. So what I like to do is, with my Fibonacci, I like to be able to, remove the 50%, and I like to just focus on the 61.8 to the 88.6. So I can actually show you guys right here, within our fib, you guys can clearly see, right, the zone of the 61.8 to the 88.6. And within the zone, you can see that the market, right, because we want to be able to see from the high to the low, and then we want a retracement. So if this market was going to keep going lower, this would have been an optimal area to start seeing some sort of rejection and or an opportunity to go ahead and hop in for a short opportunity. Okay. So now that I've been able to understand, okay, the overall trend, the overall direction, we've had a deep enough retracement into the overall move for it to make sense to look for a short. So if you guys haven't guessed it, as of right now, I'm pretty much thinking of trading with the trend. The overall trend is a downtrend. So I'm going to be trading with the trend versus against the trend, right? Now, once I've gotten all that information, now we're just going to focus right here. Okay. Once I've gotten all that information from that other, spectrum, now I just want to focus right here. Now within here, I tell you guys time and time again, right? One of my favorite indicators to use is the RSI, right? Why do I like using the RSI? Because I like whenever the white line goes outside the purple box. Okay. So whenever that white line goes outside the purple box, it is on and popping like Pippi Longstocking. Some of y'all are probably too young to even know who that is. Okay. So anytime we come outside the purple box, it means the momentum in that given direction is getting weaker, and it might be presenting it might be getting ready to present an upcoming opportunity for a reversal, right? So if it's going up, the reverse would be a sell. If it's going down, the reverse would be a buy. So if this came outside of the purple box in the up direction, that means that we would like to be looking for short opportunities, right? So within those short opportunities, the thing I want you guys to be able to focus on is, if we were to take our vertical line and line this up on the chart, this is where we had our initial, right, momentum starts to show weakness, okay? So I want to be able to focus on that spot, because the thing I want you guys to be able to see is, notice whenever it came out the box, the market continued going higher, right? But on the RSI, it started going lower. Now, if I were to change this to the line chart, what I'm going to show you guys is one of my favorite things to be able to utilize in the market, which is divergence, okay? So if you guys watch my videos, you will see it's going to be a divergence on a lot of these opportunities, not every single one, but a lot of them, okay? So that's going to be whenever the market is going in one given direction, and then you have your indicator that you're utilizing to be able to detect the divergence is going in a complete opposite direction. So if from here to here, the market is going up, that means in order to be able to have a valid divergence, I would need this to be going down the same area that this is going up. So if I actually take a vertical line and draw it on these 2 points, you guys can see exactly from here to here, it's going down, from here to here, it's going up. So they are technically doing the exact opposite, which is exactly what we want to see. So for me, my style is fairly simple. Once I identify the overall trend, am I trading with the trend? Am I trading against the trend? Have the extremes been hit? Yes. Do we have divergence? Yes. At this point, I'm pretty much looking for an entry opportunity. I'm gonna be honest with you, right? I don't need to do too much more analysis. Now, the next thing I would like to do is, we're still going to use our fib. So the thing I want you guys to be able to focus on is, notice how this high ended up getting set and the market never came back to violate it, okay? On top of that, the market obviously ended up dropping lower, and now it is giving a retracement. So what I would like to see is, has this market already pulled back into our optimal fib zone? Which, ladies and gentlemen, as you can see, the market clearly has pulled back into our optimal fib zone, and you can already see rejection and somewhat of a small impulsive move in the given direction that we would like to be going in, okay? So the final thing that I do is, I usually tell people, whenever I'm looking for entries, there's only one type of candle that I'm personally looking for, okay? And that's going to be an engulfing and or institutional candle. So with this candle formation, this is how I'm able to look for an opportunity to be able to get in a trade. But if I do not see this formation, I need to be patient, wait for the market to present me an opportunity. And if it never does, then I can just never take a trade. So from the 1 hour, I'm going to start working my way up timeframes until I find the best and biggest looking engulfing candle on the highest time frame. And then once I find that, that's whenever I'm gonna start going into looking for my prime opportunity to ensure, the stop loss, and then obviously the targets. Okay. So I did not need to go any further than the 2 hour time frame. And I'm gonna tell you why. So this candle that we're currently looking at is an engulfing candle, right? So if I were to start going through the rest of these time frames, this is going to be the biggest and best looking candle out of all these time frames. Okay. So remember what I said, I want to find the best and biggest candle on the highest time frame. The next thing I want to be able to verify is, whenever we look at our indicators, okay, do we still have similar action? Okay, what I mean by that is, even though this white line did not technically peak outside of the box like it did on the 1 hour, you can see how close it is, right? You can see how close it is. And then on top of that, we already know from looking at the 1 hour, we also have divergence on one time frame down. So we have a lot of different things going on. But most importantly, once we find this candle, we can't just randomly get in. So the thing I like to be able to tell people is, there's a couple of different things I like to do and utilize whenever I'm marking up this candle. The first thing I want to do is, I want to initially take the 50% of this candle, which I do have a different fib setting that I'm about to show you guys. I've saved in my templates. And the reason why I like using the 50% is because it's going to give me, a more optimal area to be able to look to get in. It's going to give me the best risk to reward with the smallest stop loss. Okay. So whenever I do this, I know that this 50% level is going to be, one of the best opportunities from this candle formation to be able to get in and look for opportunity to take a trade. Now, the thing that I teach people is what I recommend is you go from the opening to the 50%. And now what you actually have is you have an entry zone essentially. So the goal of all the work we've put in up until this point is we wanted to make sure that we knew the overall direction, the trend, where we're going to get into this trade. Why are we getting into this trade? We're building confidence and confirmation. So what I would essentially like to see is, obviously I would like to see the market retrace back into the zone and then give us a continuation, right? So I like to do buy limits and sell limits. So I'm not going to be the person that's going to drop the zone, wait for it to pull back, wait for a rejection, and then enter by market execution. Not saying that's a bad thing. I'm just saying that's not my style. So the way that I'm going to be able to find my exact entry so that I can set a pending order is, once again, I'm going to use the Fibonacci. So I'm going to go from the high of this candle to the low. I don't need to press play just because this candle pretty much capped off right here and then it pulled back. Obviously, if this candle dropped a little further, I would adjust the fib to the lowest point before it started retracing. So what I'm going to do is I'm going to change this back to the other fib, as you guys see right here, right? And I simply am going to put my entry where the fib level is. Now, what I mean by that is, this is the example. The goal between drawing the zone between the 50% and the opening, whenever you utilize this fib I'm showing you, you would like to look for whatever fib level is closest to or actually within that entry zone. Because if you already want the market to come to the zone, yeah, it could pull back a little bit deeper, but that's not a guarantee. So would you be okay with a little drawdown, or would you be okay with just missing the setup altogether? Because sometimes trying to minimize the drawdown is going to minimize the opportunities you're actually able to take, okay? So all I would do is simply put, I see the 61% fib is within my zone. The 71 to the 88 is slightly outside of my zone. So what I wanted to do is I wanted to be able to look for a fib level within my zone. And I ended up finding it. Now, here is where it ended up not being fun anymore. Okay, so now what I'm going to do is I'm just going to go back to the original setup so you guys can see. I'm going to hit the replay tool, and I want you guys to see how painful this was. And this is going to be an example of whenever you fall asleep, whenever you're in a setup, how it just may not go your way. Okay, so if I hit play, right, this is where the market would have put us in the trade. Okay, right here, right? Now it's cool, right? Minimal drawdown, not really tripping, you know what I'm saying? But I'm gonna keep letting it play. And this is what you guys are gonna see, okay? This is what hurt. This is what hurt, right? So if I get all the way up in here, this would have been my first take profit, all right? And the thing I want to be able to show you guys is, let me look over here on my other screen, because I actually want to be able to pull this trade up, honestly. Because I like to be able to show people obviously full transparency and things of that nature, because I want people to be able to 100% see, every opportunity that I'm showing you guys on YouTube. You had the ability to take it if you were plugged into my chat. So December 14th, right? This video is pretty old. I waited 2 weeks to actually make this YouTube video. So I'm gonna make sure I start actually uploading the trade setups at least the following week. So it's not just like such a far gone thing, but this was what the setup looked like. So look at this, right? You guys can see exactly what the setup looked like. You see the candle, you see my entry, you see the stop, you see all the targets, okay? So this is the problem that ended up happening to your boy. If you guys notice, right? So like I said, I ended up falling asleep. So for whatever reason, the market was like, you know what, Tyree? We're literally going to go in your direction, but we're going to stop 0.1 pip away from your take profit. And then what we're going to do, just to make you mad when you wake up, we're going to reverse and hit your break even. Because what I ended up doing was I ended up telling people adjust your stop loss to break even, which you'll see right here. So I was up 35 pips, adjust stop loss to break even. I fell asleep as soon as I sent this out. I woke up in pain to this. Literally came a couple pips from TP1 and reverse and hit break even, right? But it's a part of the game. So one thing I learned is, I'm gonna be honest with you guys. Hitting your break even is a lot better than hitting your stop loss. So I always tell people, it's one of two ways you could play it. Once you're in a trade, you can either wait until it hits your take profit to fall asleep, or you can wait until you're in a break even situation. I'm gonna be honest, it's hard just staying up just to stay up, and you don't know how long something's gonna take and all that type of stuff. So once I get in a break even situation, I'm going to sleep. Now, saying a situation like this, it hurts to see that it happens like this, but I didn't technically lose money, so I'm not tripping as much as I could be, but it still stings a little bit. So all in all, to say, this was a perfect trade, right? It ended up hitting my entry, rejecting, going straight to the take profit, just didn't hit it, came back and hit my break even. Now you guys are like, well, the thumbnail says you missed out on like 180 something pips. That don't look like no 180 something pip move. You're right. This was only about a 51 pip move. But what would have happened is, I'm not one of these people that just holds my trade, okay? So if you would have been an individual that would have held this, okay, yeah, you could have possibly taken advantage of, as you can see, right, 100 and about 78, 79, 80 pips. But like I said, once it came this close from take profit, and even on this candle, it hit break even and hit take profit again. I'm going to be honest with you. It's easy to say this after the fact, but you're not going to hold this. I know I wasn't going to hold this. I'm going to put this at break even every time. And, seeing this doesn't make me feel any kind of way, because I would be tricking myself to be like, oh, I should have held it. Based off of what, right? I know whenever I feel comfortable adjusting my stop loss to break even. So it's impossible for me to just make up a lie and just say, because I'm seeing it happen, oh, I should have did this. No, I shouldn't have. I should have did exactly what I did. And I'm going to apply the same steps moving forward. Now, with that being said, if you guys came, you saw, you conquered, you learned, let me get y'all to go ahead and hit that subscribe button. Because remember, I'm going to be dropping videos, and the last thing you want is your homeboy telling you, hey, bro, did you see Tyree new video? And you like, nah, I didn't. And that's because you're not subscribed to the channel, so it's not going to pop up on your YouTube feed, okay? Don't be that person. Then the next thing I would appreciate is if you guys look right underneath that subscribe button, you're going to see a thumbs up. You're also going to see a like. So if you guys would gracefully tap both of those for your boy, I would appreciate it, because you already know I'm going to see you at the top, not from the top, because the bottom is way too crowded. See you when want to be a peace.